All right, what's going on, guys? Good morning. Hope everybody's feeling amazing. We got basically the last week of June outside of a random Monday next week. So let's go ahead and see where the markets are. I'm going to go everything top down. Probably got about 10 minutes, so we'll start with NQ, of course. But we're gonna start top down from monthly on a continuous chart, so we can really get a feel and vibe of where we are and what's going on. So this today is, I mean, I'm going to probably take trades, but today is not a super big trading day or anything like that. It mostly is, prep for this week. Okay. So one of the first things I do want to point out about NQ is this fair value gap here that became an inverse fair value gap on the monthly. The next thing I'm going to also point out is the highest closing monthly candle here, and this particular high there from this candle. This is the highest closing. This is internal the range, though. This is the highest closing monthly candle. This was the highest bullish monthly candle that happened before the high was made. So in these situations, I've actually been trying to study this. In these situations, I'm putting more emphasis on the candle that closed the highest. So something that I want to identify about this candle is the 50% of the wick of this candle. And the only reason I'm bringing all this up right now because it's kind of relevant to this week. So everything here. Okay. So this is from 0 to 50% of this particular candle. Now, this for me, this week is going to be a key zone because rejection and any sell setups within this monthly space will probably be where we could potentially get a major swing down. However, in the event that we break and close above this area, that's when I would definitely be looking and targeting for the next set of highs. Now, we've already been in this area for quite some time, and as you guys can see, just pay very closely on the daily. We've only sent one day above that 50%, and all other days, bodies of the candles have failed to close above the 50% of that monthly wicks candle. Very, 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 very important. So once again, I'm still not certain that they won't come into this range, but that is one of the main things that I'm looking at. Now, additionally, we have are you doing retracement on wick only? It's not a retracement, it's just more of a measurement. So every time that a Fibonacci is used, it's not necessarily always for a retracement of something. The Fibonacci can be used to measure moves, just simply measure moves, the length of a move. For example, um, I could measure this leg to this leg, and that can tell me other information like, okay, is the next leg of the move, having got the same length? So you see how from here to here we measured it. Well, this two represents two deviations of this leg. So, this would be like another deviation from this leg. So it's just measuring moves and being able to find other measurements because there are measured moves in the market, right? Markets do make what we call measure moves where they're like either even, or it's exactly twice as much or three times as much or half as much. These things happen in the market. Now, when it comes down to the wick is more of a rule of measurement in terms of, is price winning the bullish or bearish battle, right? Is supply or demand taking over? And inside of this wick that I've highlighted here, we're basically real understanding is supply and demand winning, right? Essentially, them closing on the daily above that point could be an indicator that the market is willing to go higher. Doesn't mean that like they're going to go straight there, but it would mean that they are probably willing to go there based on how the candles are closing at that price range. So that's why here is the exact 50% point. We got a wick there. They tested it, but all the bodies of the candles have closed lower. And now we're in a state where we're not even closing inside anymore. We've started to close below. 1, 2, 3. The last 3 days have closed below that wick of the monthly. So we're looking at the daily, looking at monthly rejection. So it's just a form of using the higher time frame to line things up for you. All right. So now we drop down. We got the big Friday wick above this Wednesday high. Very nice rejection. Engulfing of this candle, but did not engulf the whole leg. It's kind of weird because we did open below the leg, but now we're retracing back into the range. And, this is why, a lot of times Mondays are not not the best to trade. So one of the things that I'm looking at was here. This leg for me has always been important because obviously from this low that they made, it is the high it's the first high that was made and ran when they finished all of this search and destroy model accumulation. So for me, I've been measuring my buy side from here. Okay. Because essentially this ran all the accumulation, but then they pulled back into range. And then we got, those last moves. Like this developed into that reversal that, has started and that has created now a lower low here. So what that means to me though, what I usually see or like to look for is that the low of this range to also be swept at some point. And currently, if I measure from this low to this high, my ideal area of range to take opportunities from is going to be in what I consider a premium of this range. That is, for example, I caught sales from exactly the high on Friday here because we were above the 236. So above the 236, along with any other confirmation, is automatic sell. Today, we've already spiked up to the 382. And anything basically above the 236 and the 382 is pretty good for the potential of a sell opportunity. So with the open on the horizon in a few minutes, I would honestly love to see them kind of tap back into this area from the wick. That may or may not be a thing, but what I will have us focus our eyes and attention on is that this wick here ran internal highs, and it not only did that, but if we include the gap down and the spike down, it's also ran the lows, making a lower low. So when I get an internal sweep and then a run on lower lows, not as strong during let's say if we're in a very strong bullish trend, but on a normal day, especially even still on a reversal, I'm looking for the move to come between this 61.8, 70%, 78.6, and take that inside of an order block with the fair value gap. So for me, today, I was buying from here last night, but At this point, I would be looking for some type of idea in here. So it would be lovely if they could come and take this high again. I don't, we'll see how that goes. But overall, selling this from a premium after they swiped the high, but also showed us where they want to go by coming and making this lower low is my ideal trading opportunity. So I have marked up this here on the lower time frame. This is very possible to actually deliver exactly from where it is. It is very possible that this can deliver exactly from where it is, and I'll show you guys why. Number one, we had an inversion that played out and got filled. If we use our inversion failure model, we came below the 236 and now we're tapping back into it with the inversion. And then also there is a normal fair value gap right here. So this would be actually considered a unicorn model for a sell. I think what I was waiting for is to see how they respond here, if they were going to do a little bit of back and forth, where they come here and push back up again. I'm just very curious to how they're going to react in this zone. But overall, as I've already said, we've tapped into my ideal area. And as I was saying, it's very possible that this move could go straight down from right here. There were some things I didn't necessarily love about it, but based on our strategy, it is valid, which is a shift, pull back into the premium, into the fair value gap, etc. So we shall see. I guess my idea for myself on MNQ was to try to wait it out till at least 9:45, 9:50, 10.
There's news at 10 a.m.
Right. Yeah. They're trying to wait out the news because there's like 3 news events and things like that. But it looks like it probably should have, but could have took a entry in here. It's very, but yeah, I hope that what I'm showing though makes a lot of sense to you guys of what I just showed you all. Just the full top down breakdown of everything that happens. This is a very important pattern in the market where you already kind of have a breakdown. The market's already shifted, but then you get this internal sweep. But right from the internal sweep, they make a lower low or vice versa. And then from there, I teach this all the time. When you get that internal sweep, you're looking for them to just come back into a premium. It could be 50%, 61.8, etc. But usually, what people are calling it, they call it a protected high, but it's not protected, but it's a very high probability high that's probably going to last until a new lows are probably made. This is pretty good. And on a move like this, let's say this 1 hour does engulf. I mean, normally I would like to see this candle retested. But we shall see. We shall see. It is a great start. It is a great start. I did take a buy on oil off an inversion failure model in this range. Not too sure if it's still going to play out.
When you have a chance, you could tell me your thoughts on Euro.
Yeah, I was looking at Euro and I decided that I'm going to leave it alone. uh, Simply because I feel like from here, this sell setup that they gave and how they ran these even highs and shift, the gap, I guess, caused the shift, the pullback to test into that premium with the fair value gap, and then the run below is like, I can't consider any buys on it until it's like back above this structure basically. So it's just wise to kind of wait it out or maybe probably be a seller for these lows. That's what I'm seeing currently on it based on how it's developed so far. Not saying that it can't like come off with a buy right here at the very bottom because they have definitely some potential with this smaller time frame shift. Is I mean a full complete accumulation. But I guess I told myself, let's wait because it's they could BS this. It's one of those to me, at least for my models, it kind of becomes very. It's not an inverse Fourier model right now, and it's not really a TS3, so it's kind of falls out of my expertise, I guess you could say, as of right now. Oh my God, gold. Okay. All right. So it looks like we were late to the party on gold, but all right, hold on. Let me see. Okay, so I was waiting on this, but yeah, I mean, can't believe they made this simple. Okay, so we were supposed to hop in this off of inversion, which is here. As I taught in my training, guys, is that when the market is trending and then it just makes like some straight line move, but that move doesn't, put a dent in the trend, you just simply pull out your your measuring tool, your fib, and identify your fair value gap and allow for that market to trade through it. And once they trade through it, you can just look for. They didn't really give. I'm not gonna lie, they didn't give a great entry on this. I mean, it's valid, but I'm not gonna lie, it's not the most fire. Uh, Not even really tapping the 236 or the 382 perfectly. Um, this is 9, 9, 15, 930 straight off the 50%. So we'll top down on gold. We're not gonna cheat it, even though I'm anxious, just like probably everybody is, to get into some stuff. But we gotta top down gold real quick. I think it's very important this week to top down on gold. Anytime there's war, I don't know. I just stay ready because I've been around trading long enough when there have been wars and attacks and stuff, and it's a real deal. It may not have been acting like it yet, but markets move ridiculously during war times. So we're going back to the beginning on gold. Remember, today is an outlook day. So from right here, I'm going to just highlight this specific weekly fair value gap. I don't think I have too much to say about the monthly. It's just bullish still, and there's no monthly retracement. So yeah, what we will do though, I will go ahead and measure the wick of this monthly candle, and we'll just drop a line here. That's the 50% of that monthly candle. On the weekly, we've already closed above it, but then off of that came a really weird reaction. But I think that was enough to let us know where they want to go. Okay. I think that was enough to let us know where they want to go. Right now, in this very moment, we have relative even highs on gold. Okay. We have relative even highs on gold. And we have a move that has pulled back, but has not gone anywhere or accomplished anything. And it's actually just an accumulation moving with the trend. People call it a channel. I call it a running flat. There's a lot of names for it, but overall, it ain't it. Okay. It ain't it. So my immediate reaction is that we're still bullish. That is my immediate reaction. Okay. I can look at things like this, and we're going to look at both candles because as I said, I've been studying this and it's kind of tough. Like this here on the daily is the lowest closing daily candle. This sequence here is more like the traditional idea of what the order block would be. I'm going to look at both. And since we've tapped into the wick of this, we're also going to look at this. Okay. So In terms of the trend, we have not made a lower low. We've been chopping. Okay, we pulled back and then we went to this slow chop, but during the chop, they've just been running lows. Something I like to see on a lot of reversals is a large wick like this, and the candle is actually running like actual candle closes running out that wick into an area of interest. Okay, so we do have, all right, propulsion block over here. We have this old inversion fair value gap here. If you notice from body to body, we tap out at the 50% of that. So a lot of confluence I've had on gold for overall bullishness. We can point out from the 7 hour, this 7 hour order block, but we're going to go to is actually the 4 hour because I know most people don't use the 7 hour, and we'll just point out the 4 hour order block. From the order block, we're going to identify what if there's been a shift, which from the last candle, yes, we have not only, we've done two things. We've done the shift and we've done the break. So for me, after the break, if it comes into that fair value gap discount price, we are in a full setup for a TS3 for a buy. They got ahead a little bit quicker than I expected, but this was something that I was looking to potentially swing from this low end here. But as you guys can see, boom, these two back-to-back 15-minute candles, this creates a low and sweeps this this Asian low, and this happens here just pre-London. And then at London open, they give us this candle into the wick of that order block, and they start to deliver. The delivery shifts structure about here. They pull back into a fair value gap and they come deep and high. But, after the shift, there's usually a deep retracement. So we do get that from low to high. Market comes right to the 70%. And now it's delivering like a madman. And it's basically completely refilled now. The entire, so we can we'll draw like this from the 30-minute. The entire inversion has now been filled. So I would say that gold is not done, but I would personally on a Monday, I would wait for it to come in back internal of the range to buy it. If it is very strong, there are situations where if it closes clearly above here, it may just be as simple as a retap to this breaker and continuation. I probably won't be in that trade though. My idea would be really anywhere in here. Anywhere in this zone. And I usually set my pending around the alert around the 618, but we shall see. We shall see. But in terms of where I think gold is going and can go, I believe that they've made the low of the week on a Monday. This is something that happens. Sometimes low of the weeks are made on Mondays, and I think this is the low of the week. And that we can measure this entire range, as this all has been a move against the trend. And this is this move here was we passed 236, we've come down and chopped on the 236. For me, this is a 236 play, and their next target is at least the 50%. So, overall, from a swing trader mindset, I would be looking for entries in this, somewhere in this range. In the future, though, let's say tomorrow or Wednesday or whatever, the market has a really strong expansion, and any retracements into the fair value gap of that future expansion, I would be looking to use as a continuation. But as of right now, we're about 15 minutes away from the 4 hour. I mean, I think that it's going to close bullish in really situate things. But yeah, a good strong 4 hour candle above this would be nice. But I honestly want gold to get up into above. I honestly wanted to actually get up above the 50% because something that I've always noticed is that when the market keeps accumulating and keeps on like dropping lower and lower, but it's not really getting anywhere. And every retracement, so if you measure each low, none of the retracements ever made it to the 50%. They never made it. Even now, it still hasn't made it. So, like for me right now, I really do see it finally reaching somewhere as from a buy within these levels, getting to the 50%. I think that's what his next goal is. And then from there we'll kind of know what's good.
Your thoughts on Euro change, man?
I don't know. I know oil probably hit stops.
You said above 56.40, right?
So from this move to this move, we pushed up above the 236. We got the move. They filled the inversion, now clearly closed above it. Yeah, I mean, for me is I want them above all of this, but yeah, I don't know. I don't yeah, I don't know. I feel like I haven't been on EU enough. That's why I was peeking at DXY to try to see what was going on, but I never finished my analysis on it.
I
But I
saw
think,
the
I think
same.
if
I
you
saw
got an
this.
entry and you're protected or good, I mean, it's a trade. A trade is a trade. It looks like it could.
Oh, I already took majority partial from that low down there, from the 1 hour order block. I took buys at the 1 hour order block on that.
Facts. So here we go on NQ, which I'm happy I wasn't worried about it too strong as yeah, it shot down. It made a lower low, but honestly, this is a type of action that I kind of expected on it. I'm kind of expecting that it would do a little bit more than necessary. Yeah, I think oil flushed me out on my swing. One big move off of what is that? 935. Even low. They buy from that. That'd be savage. I'm not gonna lie. I expected a little bit of it. So this Mav is how I feel about EU. This is what we just saw on on oil is how I feel about EU. Now, obviously things can play out differently, but this is how I feel about EU. And it's just like there's a lot for me to not know what's going to happen when they reach this area based on the previous, like based on where we're coming from. Because this last bullish candle is so far away, and that technically, if this whole swing down is an order block, right? Because that's what the real order block is, then I don't have true confirmation on a higher time frame until they close above here. That's how I feel. And I got the end of that example. Right here goes the same example. I got the end of that on oil now because not waiting for that. Now I could have probably moved stop to break even, but I'm working on holding trades. But yeah, this is exactly the same reason why I'm not super crazy about EU where it is. This is the same logic. If they're gonna do it like this, then I need them to actually close above here, and then we can ride off into the sunset. Otherwise, I'm seeing the potential for a sell. Okay, so one second, let me check the trade copier. Okay. So does anybody have anything that looks worth trading right now today with this news upcoming? I would say gold having just came above this high. I think that potential retracement back into here is now probably a high probability type of trade where you simply just go um measure from low to high. The first place you're looking at is around like the 50% as a legitimate, retracement. I don't know if in the next 10 minutes it may move higher first or not, but like I have an alert here and I would be, I personally would be looking at gold as an idea. Stop would probably be below this wick here, looking for something like that. And then just looking for the continuation of that move, at least a 1 to 3. But if as the trade develops, maybe the trade could become a 1 to 6 or something like that. Remember, we're at least targeting up to the 50%. So that's why I usually like to see when the market, okay, they made the higher high, okay, shift back into structure and continue. But I did state that there is a possibility that they just play off of this candle. Very strong possibility. So, we'll be seeing how that comes together. But yeah, as at this point, it's a patience game because I'm not buying it from the high. I want to catch it on a retrace as it continues, especially inside of a potential fair value gap that they make. As for MNQ, which chart am I using? We were charting this one. But as for MNQ, taking this off. I'm going to measure from this high to low. So once again, we're in that zone where we're in that premium inside of this fair value gap here. I'm open to them taking this high, but then I do want to keep my mind open. Are they done? Right? Are they done after taking out these triple bottoms with the gap and coming back in the range? Are they done? And is the market having, let's say, pulled up into a premium, pulled back down to the 382? This gap could be used as like an inversion, as it's been, created, filled, and retested. And are they trying to actually keep going higher and actually looking to make, higher highs? Something I'm thinking about and considering. The charts is gonna, it's gonna let us know what it is. And it's pretty much gonna be as simple as, do we respect this 4 hour order block? Or right, are we closing, candles above, it's body. It's a pretty big wick, so it's gonna be a long time to determine that. But I would say a 4 hour close above its body, I'm definitely gonna be paying close attention to that. So in 5 minutes, they did one big 5 minute drop, inversed right back, if you measure this move from high to low, this area here is a good buy area. I like to buy this, especially when the market does this type of sweep, takes out lows, then comes back immediately. That 78.6 down to the 618. If there is a fair value gap there, then that is a buy opportunity. Takes a little bit of intuition though with some of these wicks, like trading it while this is happening, not as easy as it looks here. But we've now finished this range. They've got to the 1272. That's usually take profit since all of this is right now kind of internal. But yeah, news at 10. Let's see what they have for us in store. I'm looking at this 2 hour here. I like to see this when I'm inside of a range. So from this high to this low, something I noticed is that we made a lower low. And then now we just took an internal high. So there's two ways I could look at this. Number one, I could look at this and say, give me an inversion and a change in structure, and I could look for a potential sell right off of this internal high being swept. Or I could play the long game and I can allow the market to literally make a lower low. And that's the most protected thing to do. That's usually the wiser thing to do, to be honest, is allow the market to make a lower low because it will at least give a pullback. And I know it's not high, but what happens is that there's these very tight opportunities that you'll get that'll be way more valuable with way more higher confirmation, as opposed to trying to trade it from here. And this is kind of the trick of trading, is like, is it best to be high or is it best to be sharp? You know? So I guess I'll give an example right here as I see one. I think this is a really great lesson to keep in mind. It's like, do you want to be early or do you want to be sharp? Which one is more important? Which one over the course of 100 trades is going to put you in the best position? So assume like you are looking for a sale early from up here. And maybe, you look at this like a shift and it comes internal and, you're looking for a trade. I would say, maybe your stop has to go like here, or you have to go all the way out of the way. So let's say you get something like that. All right, cool. So even now, just getting back to this low is like just a 1 to 2. However, let's say you allow everything to play out and we clearly see here, right? Market makes a low, it comes internal. This is the example I'm telling you guys about. It comes internal right here, makes a lower low, pulls back in the range. Deep wick though. This is ridiculous for no reason. 610 candle, and then starts to close, making lower lows. Okay, cool. This is where being sharp comes in. We now have a very strong idea of direction. Market completely engulfs these set of bullish candles that didn't even make a higher high. So this is now we have real directional bias. If I'm being sharp, I'm looking for the first place where I can exploit the direction of the market. So I'll be looking at a fair value, something such as a fair value gap, like right here. And what that ends up providing me with is a clear entry with a clear set of rules with potentially the closest stop loss possible. So I don't know if you guys remember this, as I teach this all the time, is that if you have a fair value gap, then if it's a valid fair value gap, then the candle that created it, that the wick, the top of that candle will be the stop loss. So now just aim into that same low is now 1 to 4. And obviously, if you're able to just hold it while they're printing, bearish 5-minute candles, you're looking at 1 to 7, right? You're looking at like 1 to 7. Okay. So this is an example of being sharp versus, trying to be high or early or right. And even if you're not comfortable with this stop, your risk to reward is still solid, putting the stop above here. Still coming out with 1 to 3, which is our vibe, and then 1 to 4, I think is very solid for most traders. So that's just filling the gap. So there's clear opportunities in here. It's actually a funny trade because the trade literally is the gap. You're literally trading the gap. You're literally trading them entering into the gap, first fair value gap, trading all the way down to the bottom of the gap. And that's a real thing though. You definitely can use the gaps to trade. All right. So yeah, 2 models. I'm not saying one is better than the other. That's news, by the way. 2 models, can't say one is better than the other, but whatever works for you. So this high, to be clear, is London's high. So we now have a new spike above it after making a sharp run down of essentially lower time frame manipulation before coming up higher. So you basically say all of this was a full-on accumulation. This is the little last leg of manipulation. I usually don't take these moves after the first touch like this, but it could be valid. But once again, the issue with today, and I'm going to tell you guys something very important for a day like today, which is a Monday. If you are bearish, it is actually sad that at 10 a.m. we're getting this new high, because if I really wanted to take a big trade, the odds on this being a good trade today has completely dropped. Had they, let's say, internally made a lower low, the odds of this trade being great would be really good. But the fact that they have actually expanded on both sides, I don't actually believe that this is something worth trading. All right. Where did my markup on EU go? Okay. I don't know. I just literally had this whole thing marked up and now it's gone. But EU looks now like where we would want it to be. So news. This makes sense. I had a whole markup on EU, but oh, that is weird. That is weird. Okay. That's there. That's still dropping. DXY is falling out the sky. CB is falling. Gold has closed on the 4 hour. It spiked above the highs. You're just patiently waiting to see how it comes back into range. And that's all my assets. We're in something I noticed is ES did not make the higher high. It has a whole set of lower highs each time. That is very interesting for sure. The last time that it did make the higher high internal of the range was here, which actually makes almost everything inside of here a potential target, at least on ES. So like the potential of them coming here and then going for a massive sell is very strong and possible. Or them just deciding to go here, pull back, and keep going. It's whatever. But something I definitely am paying attention to, and they did not make that extra internal like MNQ did. YM, same difference. So it went internal, great 4 hour fair value gap here. I mean, obviously closing below the structure after sweeping the old high back from March. The weekly engulfed the body the next week. Next week basically closed where the last one closed. Kind of weird. And gap downs. But yeah, I mean, as I personally expected, not my ideal look for the day. Because personally, I am looking for sales on MNQ. I mean, I'll buy it from a discount, like as if I obviously, like I said, I bought from here. But if it's going to be in these type of levels, I'm not necessarily looking for a buy from this level. It's actually an interesting day. So yeah, personally, guys, I have to be honest. Usually, in this circumstance, I would be very interested in sales. But with it being this type of Monday, I'm going to be patient and holding out, especially since they're right now after 10 making a whole brand new high. I'm not looking to be trying to sell from the highest high. I kind of want to be trading already with the established trend and not necessarily directly from a reset high. Okay. So here's gold. First thing I'm looking at is 4 hour did not close above here. Just got wicks into the wicks. We are just smashing right into the fair value gap here. I like this. I'm not gonna lie, I like this. This might actually be a potential buy. Simply because they drop down, accumulate without taking the low, and then we just kind of drop straight into this fair value gap, and we really haven't done the actual shift first. Time is it? We're still in the 950 10 10 macro. So first thing I'll be looking at is this little last inversion that was made here. I would personally be wanting to take an entry here. Where did I say my stop was gonna go? What was the rule? It's gonna go like here. It's pretty deep. Can I still get a 1 to 3 maybe? But we are in the zone of where I would like to take my trade. Oh crap, I'm on micro. It's all good. So this is my first entry, guys. I don't know. I don't know how good of a trade this is going to be. I really don't. I really don't. But this is a culmination of a lot of the things that I'm looking for. I'm looking for more confirmation so I can go in a little bit heavier, but they've struck everything that I've needed them to strike. So I'm just responding to that right now, which is the 618 from going external, the 50% from the low to the high inside of the fair value gap currently, and then just giving them a little space from this right here and just stop loss below that. Um, yeah, it's not a real party until we close above this. But this is my first entry. This is my first entry. The reality is that there is a better, higher probability entry that I would like to see. Okay, so what we just did is we did the engulfing, we retest the order block. We have not closed back above. We closed above this little candle here, but I really want to see them close above here. That's one thing I want to see, and then I also want to see them close above this. So not adding anything else. Otherwise, this could be a respected fair value gap for a continuation on the sell. The lower time frame to me looks not ready, but from the higher time frame, we are exactly where I want to be. And I've given myself enough space to deal with that. Even from this high to this low, just tapping back into the 50% of the range after going external. These are all things that I like from a higher time frame perspective for sure. So set an alert here. See what it's looking like. So I'm not going to stare at it all day. MNQ is very close to tapping that monthly level that I was talking about. Right, that back to that monthly area where the wick was. There's also, I love it when these things happen, but also it's kind of scary. But I'm going to take this fair value gap down and I'm going to just highlight this little area right here. So this just happens, this inversion, small little inversion here, which really is a larger range for me. It's really more like this, but where there is no touch is here, which also happens to line up right with that monthly level. So just somewhere I may consider paying attention to if they were to get there. Not saying I'm just going to enter blindly from there because I'm probably not, but could be a reactionary area. We shall see. EU turned out to be top tier in 1 minute. It will be closing above that key level, and that probably will confirm this entire correction to continue up higher. It's kind of a similar situation to what I want to see on gold. Where you hit the high, come back in the range, don't change nothing. You could chop, but continue past the high. But it is in that ideal area of buying still. Just got to be patient since we got it right when it got down here. Platinum has been trash. Looks like maybe it's ready to run. Okay. That's gold finally coming above the level that I said I wanted to come above. So once again, the way I took this, guys, was early, and that's really assuming that this candle would be a order block. This did not, I mean, it technically it failed. It's not the best field though, but them hitting wick to wick here is enough for me to believe that this order block will be valid. Okay. Because this is a fair value gap, and technically, although they didn't close above it, they did tap it. They closed it immediately. It's immediate closed fair value gap. So I put my pending here, assuming that the order block will be valid, but then also giving myself space in the event that they wanted to just make a slightly lower low. They accumulated, they ran internal, etc., etc. And now, remember, once again, I'm buying from a huge discount of this leg that is against the trend. This is the whole point of the inversion failure model, is that I expect this reversal pattern to fail. That is the whole point. I expect that people are going to start to try to sell from the 50, 60, 70, 78.6, etc., and that they're all going to get ran out. That's the model. And then, of course, once we get into the 618, 70%, you're basically stop break even at the 236. So from 50, you're not necessarily out the woods. There are plenty of situations where it is a valid sell, and that once they get around the 50, they probably could continue to drop. That's very unlikely if you're trading with the trend, right? If you're trading with the trend, that is very unlikely. But if you're trading against the trend, it is very likely that all that you're getting is a trade from the 236 to the 50. So, yeah, I'm not trying to go crazy today, to be honest. I've already feel like I've taken more trades than I would have liked to for this Monday. Based on this setup and strategy, I do need to take risk off the table. So stop is probably going here to about there. But yes, this clean, clear close above the inversion there is good. There's now a whole new 3-minute inversion as well as a 5-minute one that we, are now working on. But y'all saw me map this whole idea up of the combination of them coming back into a discount from this low to this high, but also them staying above the 618 from this high to this low, tapping that. If there's a fair value gap there, then we're going to usually continue that as a buy above that 618 70% level. That's just how it goes. So I'm going to personally call it a session from here. If you guys took this trade, then great, you in there with me. If not, then it's cool because I'm not too crazy about today, to be honest. And yeah, let's ride this one out. If this does pull back down into these ranges again, I actually think it's still good for potential another entry for a buy, but we shall see. I expect this reversal looking like situation. I personally expect for it to fail. From my experience with moves like these, but the 4-hour candle has not yet really, it closed bullish. It's also almost an immediate retest, but not really. But yeah, I think it's a decent trade. So we'll call it a session from here and let the markets do their thing. No trades on MNQ. But I will say they struggle here at around 10:30. You know, there might be a little reaction. But I'm not too crazy about it yet. Like I said, trading it from the top of the day on a Monday is not necessarily the smartest thing to do. So with that being said, guys, hope y'all learned something. Hope y'all caught some of those gold buys. And I'll see you guys tomorrow. Peace.